The Nasdaq rallying to an all-time high today with mega-cap tech stocks leading the way. It is the first time the index has hit an intraday record since mid-July, and it comes ahead of next week's busy slate of tech earnings, with 5 of the Magnificent 7 stocks expected to report quarterly results. Joining us now to discuss is Mike Bailey of FBB Capital Partners and Patrick Moorhead from Moor Insights and Strategy. And Patrick, you've been on the conference circuit here, overseas, and I know you've had a lot of insights on what's actually happening on the ground for a lot of these companies. What stands out to you as we get into earnings season?
Yeah, the biggest thing that stands out, and this shouldn't come as a surprise to anybody, is AI. And as I've been on CNBC multiple times saying, the gravy train of AI infrastructure continues. The NVIDIAs, the AMDs, the Broadcoms, it will continue. And then there's even some downstream benefits that we're starting to see, even with software companies like ServiceNow. So I think the big read going in is, what are these companies doing with AI? Are they incrementally taking advantage of these opportunities?
From the conversations that you've had, those concerns that hyperscalers are starting to cut back on spending because there's still some questions about the return on investment of artificial intelligence. Do you think those concerns have gone away?
So there was a lot of discussions, but you didn't have institutional investors pounding their fists on the table, and the Microsofts, the Metas, the Googles. They just kept investing. And I expect when we see next week with Google and Microsoft and Amazon and Meta, you're going to see pedal to the metal. You're not going to see CapEx reductions. I think each successive quarterly earnings that we get down the street, there will be a lot of questions, and there should be questions. And in 18 months, if we don't start seeing the downstream impacts, it could get ugly.
Mike, we look at valuations, and with many of these stocks now trading very close to their all-time highs, are you starting to get concerns about valuations?
So short answer is it depends. I know we've got, as you said, the 5 of the big Mag 7s are reporting next week. Some of them are starting to get a little bit expensive. I would flag a couple names. Apple starting to creep up there. Meta, again, expectations are starting to rise. We're having a higher and higher bar that these companies need to clear in terms of getting investors excited. There are a couple that are frankly looking relatively reasonable, if not inexpensive. Google, or Alphabet is trading at a significant discount. Amazon, again, as that company just generates massive earnings growth, you're seeing that multiple, that valuation really continue to be well below average. So there's sort of a nice spectrum out there of names to invest in mega cap tech. Plenty of growth, but I think you can pick names that are trading a little bit below average, or you can go for some of the names where sentiment has really started to creep higher.
Mike, Google is one of your choices. Explain why you like it, as is United Health and one other, I can't remember. But go ahead, talk to me about Google.
Sure. So we do like Google. I think getting into this idea of markets hitting all-time highs, we see it again and again. I think it is important to make sure you've got some growth in your portfolio that's trading at a nice valuation. Basically, you want to give yourself some wiggle room. What if there's a problem? Do you own stocks that are already baking in maybe some negative sentiment? So Google, again, very nice growth this year, probably similar growth next year. In fact, in some ways, it's growing as fast as Meta, but trading at a 20% discount. So we like owning stocks like that. Some of the other ones that we're looking at, again, outside of tech, I want to make sure you're diversified. United Health, again, it's generally had very nice growth long term. It's been beaten up this year, and so there's another opportunity to buy that one at a discount. Likely to go back to mid-teens earnings growth in the next year or two. Pretty compelling. The last one within tech, it's a little bit different, is Roper. So kind of not on the front page typically. Patrick was mentioning AI. AI is really just crushing everything in tech. It's doing nicely. However, if you want to own something that's a little bit outside of AI, Roper's interesting. It's almost publicly traded private equity. They buy up other software companies. Doing pretty well. Valuation has gotten back to a much more sort of reasonable range. So something interesting to own.